Are you safe? Is your money safe? Those are the two questions that you must ask yourself every single day when you enter the retirement red zone. Because when you are retired, or when you are just years away from saying goodbye to that steady paycheck, you no longer have the luxury of time to make up for a financial mistake. You cannot afford to lose a single penny of your hard-earned nest egg. So, you look at your traditional, big-name brick-and-mortar bank down the street. The one you've been with for 30 years. And you look at the interest they are paying you on your savings. It is a joke. It is practically zero. A pathetic 0.01%. You know in your gut that leaving your money there means inflation is absolutely eating your purchasing power alive. You are losing money by keeping it safe. That is a massive problem. Then, you hear about online banks. You hear about EverBank. You see that they are offering a performance savings account with an interest rate around 3.9% APY. That is nearly 10 times the national average. Your ears perk up. You think, wow, my $50,000 or my $100,000 could actually generate real, meaningful cash flow to help me pay my bills in retirement. But then, the fear sets in. Fear is a terrible financial advisor, but in this case, it's asking a very valid question. You start to worry. Is this bank real? I can't see it. I can't walk into a branch and shake the manager's hand. What happens if the economy takes a turn? What if the banking system gets shaky? Is my money going to disappear into cyberspace? You worry about customer service. If there is a glitch in the mobile app, or if you need to transfer money out to pay for an emergency, are you going to be trapped on hold for hours with an automated machine, unable to get your own money? Listen to me. You have worked too hard for too many years to stay awake at night stressing about whether your cash is secure. So let's answer the question directly. Is EverBank good for your savings accounts as a retiree? The answer is yes, but only if you understand exactly how to play the game and protect yourself. Let's look at the facts first to calm that fear. EverBank is not some fly-by-night financial tech app that started yesterday. They used to be TIAA Bank, and they have tens of billions of dollars in assets. Most importantly, they are a member of the FDIC. That means your money is backed by the full faith and credit of the United States government up to $250,000 per depositor, per ownership category. If you have a joint account with your spouse, that protection goes up to $500,000. So, from a pure safety standpoint, your money is just as safe at EverBank as it is at JP Morgan Chase or Bank of America. If EverBank goes under, the government steps in and you get your money back. Period. Another thing to love about their performance savings account, especially for retirees on a fixed income, is the lack of friction. There are no monthly maintenance fees. There is no minimum balance required to keep the account open or to earn that high interest rate. It requires $0 to open. They compound your interest daily. That is exactly what you want. You want your money working for you every single second of the day. But, my friends, we must also look at the dark side. We must look at the reality of dealing with an institution that is primarily online and over the phone. When you look at what actual customers say, the number one complaint isn't about the interest rate, it is about the customer service and the modern technology. People report frustrations with wire transfers taking too long. They talk about clunky fraud alerts freezing their accounts when they try to move large sums of money. They talk about customer service lines that make them jump through hoops. When you are retired, liquidity is everything. If you have a medical emergency, or your roof leaks, or your car breaks down, you need your money today. You do not want to be fighting with an online bank security department for 3 days just to get a transfer approved. So, how do you handle this? What is your actionable takeaway? You do not put every single penny of your liquid cash into EverBank. You diversify your banking just like you diversify your investments. Here is exactly what I want you to do. You keep a local bank account at a brick-and-mortar institution right in your town. You keep 1 to 2 months' worth of your essential living expenses in that local account. Yes, it will earn next to nothing in interest, but that is the price you pay for absolute, immediate liquidity. If you need cash this afternoon, you can drive over, go to the ATM, or talk to a teller, and walk out with your money. Then, you take your larger bucket of cash, your emergency fund, your cash cushion that you plan to draw from over the next 1 to 3 years, and you move that to the EverBank Performance Savings account. By doing this, you are maximizing your yield on the bulk of your money, forcing it to fight back against inflation, while keeping yourself totally protected from any online customer service delays. When you link your local bank to your EverBank account, do a small test transfer first. Send $20 back and forth. See how long it takes. Get used to the mobile app. Learn how the system works when the stakes are low. And remember this, interest rates on savings accounts are variable. EverBank's 3.9% APY is fantastic today compared to the national average, but they can change that rate at any time without warning based on what the Federal Reserve does. So you must promise me that you will check on your account at least once every few months. If they drop their rate significantly below their competitors, you move your money. You owe no loyalty to a bank that does not pay you what you are worth. You must be the master of your own money. Protect your peace of mind by keeping local cash handy, and protect your purchasing power by letting the rest of your cash earn the high yield it deserves. That is how you stay safe, and that is how you stay secure.